The JSE, we're joined by Nedbank's CEO Mike Brown, and the market's certainly happy with those results. Good afternoon to you, Mike. I first want to talk about another bank because I think we have to. Barclays announcing this historic move out of South Africa, out of Africa yesterday. Some people saying, yes, it's all about regulation in the UK. Others saying, does this point to prospects for banking in South Africa and on the continent? I'd love to know how you're feeling about that specific move.
Okay, I'm sure it's probably better to ask Maria than me, and we'll get to our results later. But I think if you listen to what Barclays said yesterday, and I just listened like everybody else did, I think there are challenges for them in London from a regulatory point of view. And actually, the underlying franchise of the old ABSA here in South Africa is actually doing incredibly well. And it owns all of the banks in the rest of Africa. So I personally think it is a bit of a non-event for ABSA themselves, because they're going to continue to compete with us in the markets here, and it doesn't really matter who owns them and at what percentage.
Is the race still on for Africa? A few years ago, we were talking about banks fighting to be on the continent. Are those prospects still there? Because you have bought up EcoBank branches, and I see your banking operations outside of South Africa growing very well. But is that off a low base? Just tell me what you're seeing in Africa.
Yeah, so certainly I think, broadly, if you sit here in South Africa, growth rates are relatively low. There's a lot of work going on to try and improve growth rates domestically, but growth rates in the continent are slightly higher. Now, I think over the long term, that is a structural growth opportunity for South African businesses and South African banks. In the short term, there's going to be lots of bumps in the road, particularly for oil-dependent countries. So I don't think of it more as a race. I think this is just a long-term growth opportunity.
Even though Standard Bank, MTN, DSTV having trouble in that huge Nigerian market, do you think as South Africans we're learning to operate in Africa and not being seen as the big guys trying to come in, basically?
Look, I think the reasons for challenges are all different, so it's very difficult to paint one picture. And I think lots of people talk about the rest of Africa as one geography, not 54 separate countries. But certainly from a Nedbank point of view, we have always said that in Central and West Africa we wanted to follow a partnership approach, and ETI is our chosen partner, and we cemented that partnership with a 20% strategic shareholding. In Southern and East Africa, those are markets that are a lot closer to home, that are a lot more like South Africa. That's where we think we have competitive advantage to build out under the Nedbank brand. So we've got a mixed model, a Nedbank model and a partnership model.
All right, let's come back to South Africa. What do your results say about consumers here? Because the markets are happy, your profits are up, but you've warned that this year will be tougher, and I see your impairments are up, I think, by about 6% or so. Yeah. What does it all mean?
So interestingly, our impairments in Rand terms were up 6%, but in credit loss ratio terms were down because our overall books grew. But if we look at our franchise and say, what's going on from a credit point of view? Almost counterintuitively, our consumer books are in better shape at the end of 2015 than they were at the end of 2014.
That's interesting.
So what does that say? If you're in South Africa and you have a job, you've probably got more than an inflation increase during 2015, so you're in good shape to service your debt. So employed people, which are the customers primarily of the bank in our lending businesses, are in good credit health at the end of 2015. Going to get tougher in 2016 because interest rates are going to continue to rise. What we've actually seen from a credit point of view is a deterioration on the wholesale side of the business, which is also not unexpected given the challenges in the resources and commodity sector and how that's impacted some of the big mining houses. So our underlying bad debt charges for last year improved in retail, deteriorated in wholesale, but in total there was a slight improvement in credit loss ratio terms.
All right, we've basically run out of time, but very quickly, a lot of changes in management, a new head of retail, the old guy taking early retirement. Are you shaking things up? What is happening at the top, exec?
Yeah, sure. So we announced one change in management
but it comes after a few others, yeah.
alongside these results. And yes, Philip Wessels, who was running our retail business, asked to go on early retirement 2 years ahead of schedule for personal reasons. And he is choosing to spend more time with his family. Tico Thomas, who's actually been on the Exco for 5 or 6 years now and been working in our retail and business banking business, running the consumer section, was the logical successor to Philip on our succession plans. He's actually just been at Harvard doing his AMP. So I think actually it will be a seamless transition from Philip to Tico.
All right. Thank you so much for your time this afternoon. Mike Brown, the CEO of Nedbank. And that's a wrap from us at the JSE for now.